Kenya has an abundance of largely untapped natural resources, and the recent discovery of oil, gas and minerals have set off investor interest in exploring the commercial viability of these resources.
I think at the moment it's a very exciting period for East Africa. We're a frontier area where a lot of companies are coming in because of the prospectivity of the area. Oil and gas has been around for quite some time in most of the countries. Mining is picking up. In Kenya, we haven't done the aerial surveys, but that is going to be done soon. Uganda has done it. Tanzania has got all that. And as we get more and more involved and more minerals are found, then the economies of scale are going to make it much easier for us to extract them. So it's an exciting time coming up.
According to government estimates, the extractive sector currently contributes 1% to Kenya's national income and less than 2% of export earnings. This contribution is set to grow to 10%, spurring economic development. But key issues such as legislation and revenue sharing need to be tackled.
It has been a sector that has been largely neglected as a contributor to the Kenya economy for many years and decades. But the interest in mining has really been spurred by the Kwale Mineral Sands project, where we have developed a $350 million project in Kwale County that has more than doubled the mining output from this country, and it has really put mining on the map. And it appears that while there's a lot of interest in mining, the way forward is not yet clear in terms of policy and legislation.
Obviously, there's the twin challenges of capital and infrastructure. You know, those would seem to be the most pressing now. And then obviously, number three, like I said, expectations. You know, both at national and county and community level. You know, people are really amped about what they may or may not get. And already there's a lot of suspicion between some of the players and some of the communities. That's a huge problem, perhaps even the biggest. And then lastly, we also have a skills issue. You know, these are very high-tech industries. They require very specific skill set, and so we need to start thinking of how we get our people geared up to be able to take advantages of the opportunities that this industry will present.
And what can be done to address some of these pertinent concerns?
When you talk about legislation in a county, there should be a model county legislation so that we don't have different legislations with different expectations in each county. And the key thing is that the royalties that come out should all be combined in terms of how they're going to be handled across all the minerals and all the oil and gas, and also with the other natural resources as well.
Experts in the sector also said that local investor participation in extractives is wanting.
Beyond a few tax, you know, you call them incentives, there's not that many. And that's why, because there are other sectors of Kenya's economy, because we're not dependent on the extractive industry, because there are other sectors of the economy, you know, for example, real estate and even agriculture to some extent, where people feel they can get a good return with much less risk, then capital is not flowing from the local economy into mining, perhaps as it should.
The opportunity to use the extractive sector to accelerate national development and promote economic growth requires careful planning, and perhaps the country can learn from other economies that have managed to put their house in order.
I would prefer to look at places like Tanzania, which embarked on developing a mining industry 15-20 years ago and have done it very successfully through very clear policies that have attracted major investors into particularly their gold sector and transformed Tanzania from a $100 million a year industry to close to a $2 billion a year industry. And I think that is a very clear example for us to look at because it is an EAC country, it's our neighbor. There's a lot in common in terms of language and culture and general level of development. So I think that is really the benchmark and example that we should be looking at and attempting to follow.